connect with him to understand the dynamics of the tire sector, what is happening to rubber prices, and where exactly is JK Tyre headed now that they've announced a capital raising plan of about 240 crore. Anuj, good morning. Thank you for joining us. I'll start with the big picture first. Same time last year, rubber prices had shot up, oil derivative prices have shot up, and car sales were not doing very well because of chip shortage. What has changed in last 12 months for the tire sector and for JK Tyre?
Yeah, so thank you and good morning. As you rightly said, that we have been seeing unprecedented increases in the raw material prices, and also while the the OEM demand was muted to a certain extent because of their supply chain issues, but the demand in the replacement was holding up, and also in the commercial vehicle segment, the demand was robust. But this year, what we have seen specifically is that now, at least from Q3 onwards, the raw material prices are kind of more stable, and we are seeing a downward trend. Also, the demand both from OE as well as in the replacement market, especially in the truck and bus segment and even in the passenger car segment, has now become much more robust. And we expect that in Q3, we saw that the industry grew by almost 15% as compared to the same quarter last year. And Q4 last year was quite okay. So there we are talking about a slightly higher base. But still, we expect that the Q4, the current quarter that we are in, should see growth over the corresponding quarter last year.
Your margins have been between the range of about 7 to 9%, considering that you are slightly optimistic about where the demand is moving, where commodity prices are. Could this be the breakout year for JK?
You're talking about Q4?
I'm talking about the calendar year per se. Q4 is part of it. I mean, in general, you think demand is back, sir. Chip shortage is getting reduced. Rubber prices are down from where they were. So if demand is back and if raw material prices are down, that means operating leverage and demand leverage will kick in for you.
Sure, what you're saying is absolutely right. We would be seeing that, from here on, we expect that the raw material prices should remain stable. Although, the rubber prices, we will have to watch very carefully because there are certain indications that it may go up a little, not immediately, but maybe in the second half of the calendar year. But we'll have to watch it carefully. But demand is robust, and as we know that now the auto industry is in an upcycle. So we expect that this upcycle should last. FY24, we have been talking to our customers in the OEMs, and they're also quite buoyant about the prospects in FY24. So we expect that the year that we are in, the calendar year, should be a good year for the industry.
All right. I just wanted to touch upon, Mr. Kathuria, your fundraise plans, 240 crores, very small sum. What is the outlook in terms of your utilization, and what is the outlook more further in terms of your capex plans?
So as you know that we had announced a capex plan of 1100 crores, which was in 3 tranches. So the first one, which was on the debottlenecking, which was around 300 crores, has been completed. And we have already started realizing the additional output from that. We have another 2 programs, the expansion programs of the passenger car radial as well as the truck and bus radial, that are ongoing programs. So the 240 crores that we have borrowed, some part of it would definitely go into the completion of these 2 expansion programs. We're also kind of, evaluating a few other expansion programs in certain other segments where we are seeing growth, and we expect that the demand would be robust. So some part of this 240 crores would also be utilized in the upcoming expansion programs.
Okay, fair enough. Let's also understand going down the line what the outlook is when it comes to the radial segment as well, because I want to understand what the current component of radial is in terms of your volume and what the outlook is in terms of exports.
So on radial, if you talk about passenger car, actually it's almost close to 99% is already radialized. So I think you're talking more about the truck and bus segment. In the truck and bus segment, the OE, let me first talk about the OEMs. There again, the radialization has gone up to a level of almost 85% plus. And we see that even the segment that is using bias tires, that is more on the tipper, the construction segment, there also we are seeing that there is a shift towards the radial tires. So we expect that in the OEMs, in the near future, we should see radialization to the extent of 90%. But when we talk about the replacement market, the situation is slightly different. Today, I would say that it is almost a little more than 50% is the radial tires. Bias tires are still in demand. India is a price sensitive market, so there is a certain advantage when the customers are using the bias tires. So here, while we see that there is a shift towards radialization, but the bias tires would be in demand for quite some time, in my understanding.
Okay. With the moderation that we've seen, Anuj, in raw material prices, where exactly do you see your margins settle in at? And do you think you could go back to the earlier levels of 15%?
That would what we would be working towards. But when it would happen would depend on a few factors. As you know that we have been taking price increases steadily. Even in Q3, we had taken price increases. But further price increases would be a function of the market forces and how the market would be settling in on the demand side as well. We will be also kind of, watching the raw material prices very carefully. While all this is happening, we have been also working on our own efficiencies, and we have been able to kind of better our performance on that as well. So a combination of all the three, including the demand, should help us improve our margins. To what extent, we will have to wait and watch.
Right. Anuj, great to have you today on ET Now. Thank you so much for taking the time out.
Thank you very much.